Hello and welcome to Market Fatafat. I'm Sharad Dubey and joining me is Ankita. Now, interestingly, let's look at the markets. They have been in a wobbly manner and a small range. Ankita?
Absolutely, they're in a tight range as you mentioned, and we have not been managed to break out of that range because there's no direction coming in on the tariff front also, and markets are actually quite directionless right now. But we did see some bit of a breather coming in yesterday, but we have paired all those gains. Like Sharad mentioned, we are trading at 24,577 right now. Nifty has turned absolutely flat, but we are hovering around those lowest levels of the day kind of a range right now. We are flat absolutely on Nifty, but in the red territory though, Nifty Bank also seeing cuts of almost 0.5%. We are near the day's lowest point right now. 290 points knock is what we are seeing, and we are down almost 300 points from the day's highest point on Nifty Bank as well. Let's look at the sectors then. Sectorally, Nifty Auto was in the fast lane in the morning. In fact, that was a top sectoral gainer. And also, a couple of auto names like Maruti Suzuki, Hero Moto, M&M, all these are the top Nifty gainers. But that has also moderated a bit since morning. We now have Nifty Media that's taken over. That's trading with gains of 1+%. We have Sun TV that's doing very well in trade. That's up 2%. Nifty Pharma also is doing good at this juncture, trading with gains of 0.8%. Alchem, Biocon, Ipca Lab, Granules, Abbott, all of these are trading with gains of upwards of 1.5%. Nifty IT is also trading today in the green. That's also trading up almost 0.8% in trade. Tech M is the name that's leading from the front. Is also the top Nifty gainer, trading with gains of 2+%. But a lot of stock-specific moves coming in on the back of earnings and news flows. And to give you all those stocks, let's begin with the show then, and let's welcome on board our techie Osho Krishnan, who's the Chief Manager, Technical and Derivative Research, Angel One, who's joining us. And from our research team, we're joined by Kanishka. Hi, good afternoon to both of you. Thank you so much for joining us.
Well, yes, Osho, I just have a question for the markets. The way it's panning out, it's looking like a sell-on-rise market if you look at a 2 to 3 day odd strategy, but a lot of global cues coming in, the truncated week, and domestic cues also focusing as the earnings are getting over. So what would be your views, especially on Nifty and Nifty Bank going ahead, or there won't be any trade?
Sharad and Ankita and all the panelists. See, overall, I expect that market has already been into very oversold terrain, and this is after a very long period that Nifty has seen 6 consecutive weeks of negative closing. So I expect that there is a possibility for the index to have some kind of revival, and I am expecting that on the higher end, one can expect a decent or a kind of a relief from the sell-off that we are going through as of now. Even on the technical front, the zone of 350 to 400, 24,350, 400, which also coincides with the bullish gap, has been seen as a very strong support in the last 3 trading sessions. So I expect that any kind of dip towards the zone of firstly 24,500 followed by 24,400 should be auguring well for the buyers in such kind of market, because major of the heavyweight counters like from the IT space, even the heavyweight like Reliance and HDFC Bank, they are now gathering some kind of positive traction. So I expect that any kind of dip towards the critical zone of 24,500 followed by 24,400 should be auguring well for the buyers, and from here onwards one can expect some kind of breather in the benchmark index, while the convictions will increase once Nifty closes above the zone of 24,750. So from there onwards, one can look for aggressively buying opportunity. But for now, dip should be augured well for buyers, and accordingly, one should even opt for opportunities in Bank Nifty, because Bank Nifty again is having a very strong support around the zone of current levels, 55,100 on spot levels, followed by 54,900. So I expect that this range can provide some kind of cushioning to the counter. The technical parameters and derivative parameters have already been into the oversold trade range. So there is a possibility of a kind of a revival from these levels in the short-term period.
Interesting. Alchem Labs, just have a chart check on that. The stock is up almost 5% in the day's trade. A strong quarterly numbers coming in. Initially, the screens that you are looking at, the revenue also, there is a strong jump coming in. I see the spike going past the 250 odd mark, and the margins also has increased as well. Of course, the export data for Q1 for pharma companies were on the stronger side because of tariff imposition, uncertainty. Lot of Q1 numbers, you see the export numbers were on the higher side, and you can see in the day's trade, Alchem Labs has gone up almost 5% odd in the trade. Osho, one question is for Titan. What are the important technical levels looking like for Titan itself? And of course, a lot of technical buy calls are coming from the analyst community as well.
Yes, even we have a bullish approach in Titan in short-term perspective because of double bottom formation that is being very evident on the technical front on the daily time frame chart. So I expect that current levels 3500 should be acting as a very strong momentum, could be acting as a very strong momentum in the counter. The technical parameters like MACD and RSI both are arguing well for the bullish momentum to continue. So I expect that in the short term period, there is a high possibility for the counter to test the zone of 3590, 3600 on a very short term perspective, which also coincides with the bearish gap. And once it breaches the zone of 3600, then we can see some kind of continued momentum. But for short term perspective, 3420 is a very strong support levels. So one can look for buying opportunity with 3420 as a stop loss. And on the higher end, 3600 will be the immediate target from a short term point of view.
That's the call coming in on Titan on the chart. But let's move on to the biggest loser in trade today, and that's Praj Industries. That's taking a knock of almost 7%. In fact, it was down almost 9%, hitting its 2-year low. Praj, after its Q1 results, we saw a sharp knock coming in on the profit front. It was down almost 93% on a year-on-year basis at 5.3 crores versus an 84 crores, in the previous year. The revenue also saw a downtick of 8.4% on a year-on-year basis at 840 crores. The EBITDA was down 65% at 31 crores on a year-on-year basis, and the margins also saw a downtick of 824 bips at 4.9% on a year-on-year basis. A sharp knock coming in on the profitability of Praj Industries. On the back of that, stock taking a beating, currently trading with cuts of almost 7.5% in trade.
Interestingly, we caught up with the management also, and after a challenging quarter for Praj Industries, MD Ashish Gaikwad has given a cautiously optimistic viewpoint going ahead for the future. Listen in.
It is a challenging time right now when it comes to the quarter's results. There are two main reasons, I would say. The first one is, of course, we know that the EBP 20 program, which is 20% blending of ethanol into gasoline or petrol, has been very successful, and it has been completed way ahead of the schedule. The second part, as you rightly mentioned, is about not just the tariffs, but the uncertainty in tariffs, which is weighing more. I would like to mention a few points why we are still cautiously optimistic about it. First of all, we believe that there are discussions already in the play when it comes to additional blending mandates for ethanol, and that will certainly give an impetus. The other vector that will play on ethanol market and its more capacity addition will be the flex fuel vehicles and their introduction in the Indian market.
All right, so that is the management of Praj Industries, or a cautiously optimistic outlook on the company. But let's move on to the next earnings candidate that's likely to report its number today, and that's Hindalco. We have seen Novelis come out with its numbers, but Hindalco is set to report its Q1 numbers. Tell us, Kanishka, what can we watch out for? Kanishka?
All right, then let's talk about Hindalco as well. It is in focus today after. Am I audible? Right. So let's talk about Hindalco. Now, the shares are in focus today ahead of its India operation results and after its subsidiary Novelis that posted a very strong Q1 FY26 with revenue coming in as the beat. Novelis's revenue that rose about 13% on a year-on-year basis on higher aluminum prices and strong beverage can demand, though EBITDA per ton that slipped to $432 from $494 earlier in Q4 due to market headwinds and higher scrap costs. Now, the management that has kept its long-term $600 per ton EBITDA target intact, with cost reduction savings now expected to exceed $100 million this year and over $300 million by FY28. Demand that remains soft in auto and specialty segments but resilient for beverage packaging. Now for India, that is Hindalco, which is going to report its results anytime now. Kotak expects Q1 EBITDA to come in at 4,530 crore rupees. That's up 23% on a year-on-year basis, but still down about 15% on a sequential basis, with aluminium margins hit by lower prices and copper EBITDA down about on weaker volumes. Key watch points, of course, remain Novelis's demand trends, margin guidance, and Hindalco's India business outlook. So that's why we are tracking Hindalco today.
Well, from metal space, hospitality comes in, and festive season is also in a full flow. Long weekends are coming, and stock in focus is IHCL. Important acquisitions coming in, and they have acquired stake in A&K hotels as well as Pride, and this is the Clark group of hotels and restaurants also. Interestingly, they will be acquiring 51% stake for a consideration of roughly 204 crore odd rupees. And of course, IHCL has been on a positionally strong setup by the technical analysts as well. And stock kind of tapering after a gap up opening coming in the stock, and stock is roughly a 0.5% up. 750 levels is something which the stock is currently trading at. But there is some more work on this stock, especially as we have actually caught up with the management, and Puneet Chatwal, the MD and CEO of IHCL, will spill us the beans of the entire total acquisition.
Human has had a very good evolution. What started as a home delivery service at the peak of COVID found its home as a QSR complementing the Ginger brand, which sits within our company in Roots Corporation. So one being a root spice and other being the root vegetable. It just seems like, everything just fell in place in the same family. I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it. Our strategy for international is very much limited to the Taj brand in key gateway locations and markets, and the rest of the focus remains pan-India.
Right, Sharath, as you pointed out about the long weekend and the festive season, it's time to perhaps look at one of their properties to start booking now.
Exactly, and I think they will be totally booked as well, and also the airfares, Ankita, they're on the higher side.
Absolutely, Sharath. So the airfare is also on the higher side, even though we have now more options to look at. But with that, also, let me come to you now. Eternal is a stock that you picked out for us on the charts. Eternal, that is trading with cuts of almost 1% in trade today. Tell us on the charts, what do you see? Because for Eternal, we were watching out for the 300 mark. It has already hit the 300 mark. From here on, what is the upside that you see?
See, overall, the technical setup for Eternal is very positive. On the daily time frame chart, the counter has seen a kind of a flat pattern movement, but although the breakout is still pending, so I expect that any move beyond the zone of 310 can provide a very strong momentum in this counter. And on the higher end, 335 to 40 will be the immediate target that one can expect. While on the lower end, the bullish gap approximately around the zone of 290, 285 should be auguring very well for the short-term traders. So I expect that in the short or from a medium-term point of view, there is a high possibility for the counter to outperform the market. So one can look for buying opportunity above 310 for approximately 340 as a short-term target.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzzes on the other side. Stay tuned.
Welcome back to Market Fatafat, and let's move on to the next group of stocks, the shipping stocks. GE Shipping, Shipping Corporation of India, and why these stocks are buzzing in trade is a very important merchant shipping bill 2025 has been passed in the parliament as well. Both the stocks in the green today. Shipping Corporation are up 3%, while GE Shipping, look at it, the stock has also seen a bump of 2%, and in a wobbly market and a range-bound market, we are seeing these both stocks actually holding their gains as well. Interestingly, a lot of new important legislations would be coming up both for domestic and export users, and these companies would be the beneficiary. and analysts are bullish on a fundamental basis also going ahead, as there is some value in these stocks as well. So there is an interesting development coming for the shipping space.
All right, so that is the shipping stocks that are in focus in the back of that. But Osho, let me come to you for the next counter that you picked out. GMDC is what you picked out for us on the charts. Tell us on the charts, on the technicals, what are the levels to watch out for GMDC?
Basically, GMDC has been gaining decent traction in the last couple of trading weeks, and the 50-day exponential moving average historically has provided very strong cushioning to the counter. So I expect that in the short-term perspective, the counter has a potential to retest the zone of 460, while on the lower end, 390 is expected to act as a very strong support for the short-term trader. So one can look for buying opportunity in the counter, and on the higher end, one can expect a decent surge of approximately 30 to 40 points from current levels from a very short-term point of view. So overall, the technical development in the counter is very much favorable, and the risk reward is also favorable from a short-term point of view. So one can look for buying opportunity at current levels with a stop loss of 390.
All right, buying opportunity at current levels in GMDC. But let's move on to the next counter, which is seeing a knock in the trade, and that is Bata India. That saw a fall of almost 3% in early trade today, on the back of the fact that the net profits fell almost 70% on a year-on-year basis at 52 crores versus 174 crores on a year-on-year basis. The revenue saw a downtick of 0.3% at 942 odd crores. EBITDA, however, was up 7.6% on a year-on-year basis at 199 crores, and the margin also saw an uptick of 155 bips on a year-on-year basis at 21.1%. But on the back of the sharp knock that we saw coming in as far as the profitability of the company is concerned, we saw the stock down almost 3%, has minorly recovered from that, but nonetheless, it is trading at the lowest point of the day with cuts of 2.9%.
Interestingly, Bata India, the day is low trading, but Osho Policy Bazaar, a PB FinTech stock, it has been gyrating, and it's also a key beneficiary coming in when it comes to the festive season, and the numbers are also good fundamentally. How is the overall charts looking like when it comes to Policy Bazaar?
See, overall in the last trading session, the counter have seen a very drastic upsurge that was backed by very strong volumes. Today, the counter is having a kind of a breather from the higher levels, but overall the trend is looking very bullish because the counter have seen a decent surge from the 200-day SMA. So I expect that in the short-term perspective, one can look for buying opportunity. The counter has a potential to retest the zone of 1920 to 1940 in the short-term perspective. So one can look for buying opportunity, keeping a stop loss of nearly 1770 for short-term point of view. Overall, the trend is looking very bullish, and I expect that the momentum should continue once it breaches the zone of 1940 for further levels of nearly 2150. But that's from a medium-term point of view. From shorter-term point of view, 1920 can be seen as the first potential target.
All right, moving on then to the next counter that is in focus, and that is Bajaj Consumers. That one has posted its Q1 numbers. Take us to the fine print of the numbers. Kanishka, what do the numbers look like?
Absolutely. So Bajaj Consumer, like you said, is in focus after reporting a decent set of Q1. Revenue rose about 8.5% on a year-on-year basis. Net profit was up about 2%, and EBITDA grew 10.6% to 40 crore rupees, with margins improving to 15.2% level. Now, brokerage firm Nuvama, that has maintained a buy call on the stock with a target price of 274 rupees. Noting that margin expansion and a return to growth is what it has highlighted in its Q1 results. Urban sales, they were aided by urban sales were strong. They were aided by wholesale recovery, while rural demand that continued to remain weak. The brokerage has also pointed out that international business declined on tariffs and geopolitical disruptions, though Nepal and Bangladesh, they have posted strong double-digit growth. However, despite that decent set, the market hasn't been reacting all that positively to Bajaj Consumers' numbers. As we can see, it's down about 2.5% as we speak.
Yes, Bajaj Consumer still near the day's low, but Osho M&M, that's the stock in focus. Yesterday there was some volatility in the counter, but nevertheless the festive season is there, and some bullish reports are also coming in when it comes to the auto sector, and the rains have also been actually strong in the entire month of August till now. So what are the views coming in technically when it comes to M&M? What are the positions looking like?
See, overall, this counter has been maintaining its upward movement, and there has been kind of a consolidation at higher levels, even though the market has seen a very decisive correction. But from auto space, this counter have maintained its bullish momentum. So I expect that it is still on the verge of giving a multi-week, or we can even quote multi-month breakout. But I am expecting that with the kind of momentum and with the kind of traction this counter is gaining in the recent period, I expect that in the short-term perspective, there is a high potential for a breakout in the counter. And on the higher end, I expect that once it breaches the zone of 3380 or 3280 or 3300 kind of a zone, then from there onwards, we can see a decisive surge of nearly 300 odd points on the higher end. So 3600 is the target that I am expecting in the short-term period. While on the lower end, the support is very nearby, approximately 3150, 3100 is supposed to act as a very strong support levels for the counter. While on the higher end, 3600 is the target that I am expecting from short-term point of view.
All right, keeping with the auto pack then, the Motown is likely to see a good festive season on the back of healthy demand and discounts, believes Sai Giridhar of FADA. Let's go across and listen to what else he had to say about the industry.
If we see the financial year till date, it's been a muted growth. It's a low single-digit growth across segments. If you talk about two-wheeler, three-wheeler, all these segments, it's a single-digit, low single-digit growth. But if you talk about the upcoming festival season, yes, we are quite optimistic, especially with the bumper harvest which we are expecting post the monsoon. We all are hopeful as far as the auto industry is concerned that this is going to be a bumper festival season for us. So we've already seen till this date that rural is already picking up. That is quite evident from the two-wheeler sale. If you see per se, two-wheeler is seeing a high single-digit demand. Which probably in coming months it's going to see a double-digit demand. We're quite certain about that.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you more buzzes in the trade. On the other side, stay tuned.